I think everyone needs to check the mic first. Yeah. Hello. Hello. Yeah, it's good. It's good now. So someone said that आवाज has to be बुलंद.
Hello.
So with the bulandi towards the Gulf and India together, I take the privilege of moderating this session. The top leaders are here. Certainly, sir, I will be sitting. Don't worry. It's my regard to the audience, and I take it forward. As I understand, Mr. Sanjeev Balachandran is virtually connected now. Can we see him on the screen? Hello, sir. Welcome to the West Asia Dialogue today in Dubai. Yeah, Sanjeev, sir. Thank you, Sanjeev ji. And Mr. Siddharth, Mr. Vishwajit, and Mr. Gleave, welcome to the forum. So as we understand that the way the landscape of economy is taking place, and more categorically, if we go towards the digital economy, where 15% proportion of the world GDP is the digital economy, the fastest growing segment, almost 3 times growth rate than any other sector growing in the world economy. Mr. Siddharth, as you are here, a chairman of Buimerc Corporation Limited, honorable chairman of Indian Business and Professional Council, the former chairman of India Club, so suffix and prefix of India, and awarded as one of the highest civilian award in the UAE. May I request you to unveil this conversation with the question that, in fact, we all have that thought that how the investment landscape will change UAE and India.
Thank you, Sahitya. Thank you all. It's a pleasure to see so many people in any audience, so it's the same here. Now, I think let's probably look at very simple answers to this. How the investment landscape is going to evolve, isn't that the? And let me speak in, now we have Sanjeev as well here, so you can vouch for what I say. We have targets. Now, if you speak of the dual landscapes of the UAE and India, we have specific targets. For India, it is the 30 trillion that the Honorable Prime Minister has given us as a nation and as the extended diaspora to achieve. For the UAE, it is, if India reaches a 30 trillion by 2047, I think the UAE, the safe assumption is that a 3 trillion GDP mark is relatively a safe assumption. Now the point here is, how do we achieve this? So the investment landscape, you have to break it down, extrapolate it into specific actions that all of us can do, specific to both these countries, as to how we can achieve this. Now, if you look at the capital markets, my friend Ashish is here. For any nation, developing, I'm not going to use those words, who has a developed investment landscape, I think the GDP to market capitalization of the stock exchanges relatively should be 1.25 to 1.5. So if you keep that in perspective, you are talking about a 50 trillion, 55 trillion US dollar market capitalization for the capital markets. Now, if you have to achieve that, safe simple extrapolation is the current 5,500 odd companies that are listed should become 25,000 to 30,000 companies that will be listed on India's stock exchanges. Now, we have a 30,000 lacunae there. So the efforts that will be directed towards every active investment will be definitely focused on the early stage, the startup ecosystem, but also to help the mid-stage companies in accessing capital. So private credit will be a big part. So I think holistically speaking, startup, early stage and mid. So these company ecosystems, these faces in every company's lives, these companies will be the ones that are taking the bulk of the capital, and rightly so.
Very well said, sir. And certainly as the presence of the NSE stock exchange over here, I was just watching what is the rate going on. NSE 50 is above 26,000 and the BSE Sensex is also above 85,000. Same time, if we
60 times in the last 5 years.
60 times of last
Ashish,
5 years.
right?
Yeah, certainly yes. And who can make you wrong in that, because we know that you are the largest individual shareholder of BSE stock exchange. So simultaneously, if we
Hopefully NSE as well in some time.
yeah, it is together. So NSE as well as BSE, my gap of mentioning that. But if we see the gold rate today, the way it has already crossed $4,300 per ounce, wherein the commodity side oil is at or around $60. My question goes to Mr. Sanjeev, who is connected here. Mr. Sanjeev, we know that you are a principal, you have been a principal advisor for Government of India, economic advisor for Government of India, and presently with the economic advisory with the Prime Minister of India. How do you see this, the growth of last 2 to 3 years, or I can say 2.5 years to 25 years? What is the length and what types of the growth, and where India and the West Asia category, GCC, if we talk today, how do you see, and which are the segments and sectors the people should focus, and where the planners are, from the eyes of a planner, an economist, how do you say and how do you narrate, sir?
So, thank you, Jeremy. Thank you, organizers, for giving me this opportunity to speak to all of you. Now, when you say about the last few years of growth, there should be India. India, obviously, like the rest of the world, suffered the major shock during COVID. But since then, we have recovered quite strongly. And in fact, we have been consistently the fastest growing economy in the world for now several years. And we look at the latest print that we have for the latest available quarterly data, India's economy was up 8.2% year-on-year. So even if this data is being supported by statistical factors, I think we are consistently managing to do 7 to even more than 7% GDP growth. Now, what is important about this is that we are managing to do this without more anything. Inflation, in fact, is below 1%. The banking system is in good health, the stock market is doing well. In fact, since we were discussing the stock market just before this, not many people realize that more money is raised in Mumbai through capital markets than out of London these days. So there has been a major change in our importance as an economy. We are now about the same size as Japan's economy, but growing a lot faster. We expect that in the next 24 to 36 months, we will become the world's third largest economy, going past Germany. And of course, in PPP terms, we already are the world's third largest economy. Now, all of this obviously needs a lot of energy. And so this continues to be a major link between us and the Middle East, for the simplest reason that although we are investing very heavily in renewables, more recently we have changed rules for investing into nuclear power, and of course we are investing in green hydrogen. But let us be very clear that for the time being, hydrocarbons will remain an important part of the mix, and that will continue to be an important thing linking us to the economies of the Middle East. Secondly, of course, the Middle East has been a very important source of investment into our economy in multiple ways. And of course, there is a large Indian diaspora that lives there. So all of this will continue to be important. But since you asked me about the next 30 years, let me say that in the next 30 years, there will be some very major changes in the world economy. One of them obviously will be that we already are a highly digitalized economy, and of course artificial intelligence will make it even more so. Now in this context, let me say that India will be strongly embracing artificial intelligence. Yes, there are certain risks from artificial intelligence and its applications, but be very clear that we in the Indian government intend to embrace policies that will mean that artificial intelligence will be incorporated not just in the government but in every aspect of society. And whether it is Indian companies or foreign companies, we intend to build this sector up. In fact, as you may be aware, just in the last 10 days, we have had very major investments by Google, by Microsoft, and then by Amazon, adding up to something like $70 billion into our digital economy. So, very big investments are being done by global majors. Indian companies, we have large IT companies, as you're aware, are also investing into this, and there is this huge number of startups that are popping up. Literally across the country, there are literally tens of thousands of startups in the digital space and in other spaces as well. So the amount of innovation that is happening, and as I mentioned in the beginning, our capital markets are now among the strongest in the world and capable of raising huge amounts of resources. The combination of capital and domestic market and innovation mean that you will see a lot of economic energy that will be coming through. And the government stands there willing to take whatever policy changes necessary to keep this energy flowing. So
Thank you.
in the next 25 years, we do intend to take India up several notches. And as I said, just in the last few weeks, we were seeing major announcements from long outstanding labor law changes, improvements in the GST system. Just yesterday, they called all the changes in the nuclear laws, the dramatic removal of dozens of quality control orders that have been put in place for becoming inefficient. So bold measures are being taken and more will be taken when necessary. Back to you.
Thank you. Thank you so much. We will be eager to hear on 1st of February what changes and how the legacy is being maintained towards the future economy. As artificial intelligence is very loudly mentioned, yes, I was reading one of the data that in context of India, the enterprises, 87% enterprises are already with IBA, with artificial intelligence. So they are equipped, they are investing in artificial intelligence. Taking that lead forward, I come to Mr. Bishwajit. Mr. Bishwajit, you are a Chief Investment Officer. May you tell something more about yourself as an introduction? If it is not working, you can take my mic.
Hi, thank you for giving me the opportunity. My name, as I said, is Biswajit Dasgupta. I am the Chief Investment Officer of Asas Capital and Asas Group. Asas, by the way, Asas in Arabic means foundation. We've been around since 2009. Started off in Dubai in the IFC. Now we have offices in India and in Saudi Arabia. We are essentially financial advisors focusing on investment banking advisory and investment advisory. I look after the product side of that business. So yeah.
Yeah, thank you. So, how do you see the financial instruments enabling the long-term risk sharing?
Sure. So, well, there are the traditional way of looking at this is, you have equity at one end of this where people, invest into the equity of these businesses, and then depending on who brings what to the table, the equity is distributed between the partners, so on. We have actually been involved in a couple of transactions where we have brought Indian companies to the international market and help them to raise capital from investors from the region. As we speak, we are doing that for a company in the media space, and also working with the state government on the refinancing transaction. So equity is one piece, obviously. Then there are other pieces like long-term debt, right? Whether it is perpetual or long-term debt, that can be tied to things like green initiatives or green objectives or not. But again, that's something that is working pretty well, I would say. And the third big piece is basically a sort of a collaboration between various parties, which could be anybody from DFIs to banks to the entrepreneurs and so on, where often the DFIs will sort of insulate the entrepreneur from the first loss because they want to promote a certain kind of investment. So if you are, for instance, driving investments into the SME sector, right? The government or the DFI picks up the first loss piece, and then it gets passed on to the entrepreneur.
Many chartered accountants are here, and as you were talking, I was linking the balance sheet, that one side the debt and equity, and then the rest of the pieces are the collaboration. So,
correct.
Right. So the three pieces of information, the message. May I go to Mr. Glebe? Glebe, we know that you are in the legacy or advisory from UK, Europe, to the Middle East, to India, Indian subcontinents. May you please tell us something more about you?
Sure. So my name is Gleb Borkov. I'm the MD of Relay Capital Group. We are an international multifamily office, originally based in London. Now we've pretty much completed our move to the Middle East. So we're now headquartered in Dubai. I think this type of move already tells you something about what's happening in good old Europe, in the UK. So overall, I must say that our company was founded back in 1996, and maybe for the 20 years since 1996, European and Western investment community was not really considering India or GCC as places of investment interest. So this has drastically changed due to a combination of factors, whether, misplanned, misfortunate, or some other factors that we don't know about, but Europe has pretty much become uninvestable. UK has lost massive ground to Dubai and some other centers in the GCC. And a lot of institutional, corporate and private capital is moving towards the region. And the two powerhouses within the region is obviously GCC with UAE, with Saudi, and of course India. India, in my view, if we're talking about the next 25-year horizons, will become, and has already become, in fact, the main economic powerhouse of the world. I think the population of India has now exceeded the population of China. But if you compare India to China, China has pretty much reached a very high level of development. So there is very little potential for increasing internal consumption. Whereas Indian internal market is still massive. Any sector, pretty much any sector, from digital economy to fast-moving consumer goods to, I don't know, petrochemicals, anything, has massive internal markets still unexplored. That said, Indian companies have pretty much already attained a scale where they can become global themselves. So where they should start looking at, going international, acquiring, making strategic financial and technology investments in other parts of the world. I think same applies to the GCC region. I mean, obviously you have Mubadala, you have some of the state pension or state investment funds, but you also have a lot of family-run holdings and companies which, again, should start looking overseas more aggressively, with the aim of acquiring technology, bringing this technology to the region. In fact, one of the things that we're doing as part of our restructuring is bringing a portfolio of our tech companies into the region, into the GCC as a first entry point, but we're also very much eyeing the Indian markets because, as I've already mentioned, there is a massive opportunity for internal demand.
Thank you. Well described and narrated and summarized also to some extent, I can say. If I come a very simple question that many migrations are happening, the people are investing from West to the Asian countries, to GCC, to India. Do you see it is a short term or it is something a long term? Will it be continuing, or how do you see that? Or it is just because of some opportunities such migrations are happening, or the people are really looking for those shift of the investments? And if yes, if it is long term, then which are the main key factors which are fueling that migration? No, I asked Mr. Gilly, sorry.
Okay,
if
okay.
I repeat the question.
It's okay. I've understood the question. I think any migratory moves, they start as opportunistic, as a trend which emerges based on something. But if the factors which have caused these shifts, if they persist in time, then these trends, they become permanent. And I think this is what we're seeing now with GCC attracting so many wealthy individuals from Europe and from the United States as well. Unfortunately for Europe and for the good old West, they're not changing their systems at all. In fact, they are making them even worse. I'm talking about taxation. I'm talking about bureaucratic burdens. I'm talking about personal safety. So these are the three key rationales why people are actually moving to the GCC. And it seems like the trend is structural. Give it another 2-3 years, I think most high net worth people from Europe will have a base here. Whether they will physically move to live here, that's a question, but they will certainly have a tax base here.
Thank you. Thank you. And let me promote our Indian Business and Professional Council over here, that the proactiveness what we have started under the mentorship of Mr. Suresh over here, that the Family Business Office and Wealth Maximization Forum we have created under the umbrella of Ibpc Dubai. So we will be taking those leads time and again. And yes, this is a time when not just India, but a global forum should be curated for and West Asia Dialogue is one of the initiatives to that. Mr. Siddharth, I have to follow the artificial intelligence approach here, because until we say Alexa, the answer doesn't come. So that confusion happened just before. So please don't take it Alexa, but yes, I am saying Mr. Siddharth. As we Mr. Sanjeev just narrated or highlighted few of the industry sectors like food, technology, healthcare, or even if I add on to that the solar, the power. Which sectors, you are an investor, which sectors offer the highest growth potential? The growth potential you can come in your own way, whether it is a short term or the long term or the way you see the growth. But we are keen to know that which are the sectors which can be taken on target as the highest potential sector for India and then taking the lead for the globalization. Categorically GCC.
So I'm not a futurist, so I will not be able to give a specific sector, but what I will hypothesize is I think every sector, specifically in India, as was spoken about by my friend Gleb, India is a consumption-oriented economy, and I think we haven't even scratched the surface when it comes to potential. So I think any sector that adopts artificial intelligence, and remember, artificial intelligence is not an industry or a line of business, it is an integrator. So I think every line of business that adopts AI at its core starts that elevating process towards enhanced productivity, and enhanced productivity in itself will multiply every year. So therein lies that multiplier effect which will result in this achievement of this high GDP aspiration for both India and the UAE. So every sector, I believe, has the potential to become a multiplier. And the only way, the X factor for that, for us to achieve India from the 4.2 trillion that it is to become that 30 trillion, UAE from the 500 odd billion that it is today to become that 3 trillion, I think AI will have to become an integrator, not a differentiator.
Very good. Mr. Sanjeev Sanyal, I come back to you. As Mr. Siddharth mentioned that IMAC, artificial intelligence, and even you mentioned few of the sectorials highlight, and of course artificial intelligence. Recently with the UAE, we signed the CEPA, 2.5 years, very successful attempt. Same way, we have initiated IMAC. The initiatives of I2, U2 have taken place. How can we integrate all together? You are a principal economist. From your eyes, from your views, that how can CEPA, IMAC, and IT, I2, U2 can be integrated?
So let me say that obviously we live in a time where global trade relations are all going through major disruptions. So clearly the old multilateral system with the used to work has broken down. So what we are doing here in India is trying to basically create a network of bilateral relations with either individual countries or with groups of countries. So that is the context in which, of course, we have signed or are in the process of signing free trade agreements with countries in the Gulf area. We have obviously got free trade agreements with countries like Australia, the UK. We are in deep negotiation with the European Union, and despite frictions over tariffs, even with the US. So basically, what we are doing is we are entering into a complex network of these bilateral trade and investment treaties, and hopefully that will allow us to keep trading despite the disruptions that we are seeing. Now, in this context, let me say that there are various ways in which we have looked at this. One is what we call multilateralism. Now, we understand that you do not any longer have one big system where everybody can sign up. So in this somewhat disruptive environment, the Indians expect to have signed so relationships across the world, whether IUU or IMEC or any other, where interests of different parties come together. So on those areas, we will build a relationship. And so this has been reasonably successful in other places. And we intend to continue to build on this rather than wait for some wider WTO or multilateral system to come into play, which may or may not happen in any reasonable time frame. Now, in this context, we are building various shared platforms, but we are also, in the same time, creating our own systems. For example, Ibpc as a place to do business, as a financial hub. We are creating the physical infrastructure, like we are building a massive new port at north of Mumbai, which will be actually bigger than all our current ports put together, and so on and so forth. So we are building the physical infrastructure in terms of ports and so on. We are building the software infrastructure, as I said, we are Ibpc. We are trying to spread some of our platforms, for example, the UBI payment system, and so on and so forth. And of course, we are welcoming the world's business to come into business in India. And as I mentioned just now, that we have just seen promised in the last 10 days, just 3 companies have promised something like $70 billion worth of investments. But this is not just in software and AI, we are seeing several large investments happening in, for example, in electronics and so on. We are now already the second largest manufacturer of Apple phones in the world. So, big investments are taking place. And obviously, this relates to all the relationships that we have with our partners, which includes, of course, the UAE and other countries in the Gulf. And of course, I mentioned earlier that the energy relationship is something that remains very important. While we build up green energy, nuclear, and other sources of energy, we will continue to maintain hydrocarbons as a part of the overall mix. And so the energy relationship also will continue to be an important one. Not to mention the fact that many of these countries, although they are small individually, together they can also be important export destinations. So that's basically how we think about this. But we will keep adapting as we go through time, because we are in, as I said, a disruptive period. So frequent, even if there are major changes, we will, as policymakers, keep sort of adjusting to the time of the world. Now you will have to excuse me because I have
No, I'm done with you. Thank you so much, really. You spared a good time and very well mentions about the upcoming things as well as the present. And the highlights are really remarkable. Thank you so much, sir. I will continue another 2 questions with the forum, if the audience allow. Mr. Biswajit, as the artificial intelligence has been well spoken, may I request that how can capital support the sustainability and AI?
Thanks. So first of all, just to add to what Sanjeev said about AI and Siddharth said about AI, I think we have to start thinking of AI as an enabler rather than as an end product in and of itself. Much like, and I'm going to say electricity or even internet or whatever, it's kind of silly today to say this is an internet company, right? I think the same thing will happen with AI. It's not that AI is a company or a product. AI is something that you use to do something else. My expectation is that in terms of productivity, you will do what you're doing today much better. That's one aspect of the productivity. And you will be doing new things that you're not doing today, right? Much as, when the internet revolution started, nobody thought about, Uber or Netflix or
Basically, the innovations.
innovation will happen, right? And this is how technology has always been. I mean, when the Wright brothers invented the airplane, nobody thought it's going to revolutionize the world in the way that it has done.
Exactly. Good.
Right.
Well said. Mr. Gilly, a short question and the short answer, if I expect, that how can investors balance the returns with social impact?
Well, that's $1 million question, a billion dollar question. Yes, the entire CSR industry is, trying to resolve this
So
issue.
investments and social impact, simple.
Look, ultimately, I think any investment company, any large enterprise should be viewing its investment activities, as having social and environmental impacts, which they do. So if they have this criteria in mind, then I think we have half of the problem solved. Okay, so it's not just about the money, it's about the impact that you're making. So that should, be the driving force behind, boardroom thinking. And actually, I think GCC countries and GCC companies excel in that, because there is a very strong community responsibility spirit within the, GCC companies' boardrooms. I think India should probably, this is something, a lesson that India should learn as well.
Very well said. This year we are concluding with community celebration of this year, 2025. In 2026 in UAE, it will be a family year. Siddharth, the last question to you. As the Gulf topic has come, that how can Gulf investors tap India's SME market strategically?
I think on a very core level that is already happening. But what I would like, my aspiration, if I can say that, is a seamless dual reinforcing flow from both sides. I think India is probably transitioning beyond merely a capital receiver. India is also generating a lot of capital. Because if we are talking about unicorns, and now there's a new term, it's called decacorn, 10 billion. If we can responsibly cultivate this ecosystem, we become capital providers and capital generators of our own. So then, how to tap the flow seamlessly from both sides, I think that is something that all of us should aspire to create. Some platform, some innovation that enables both of this to seamlessly flow, responsibly and credibly. I think that is an aspiration that I would have.
I think with the aspiration you give responsibility as well as the accountability now, and the homework for we all together, how we can take those dialogues and the initiatives in the real results, we can say. And herein I would like to thank you all for being with us for this discussion for the global impact and the economy. Thank you very much.
Thank you.